This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about the market today. Look at the S&P and the QQQ. I also am going to cover all the market conditions just to make sure we review them. Try and do that at least once a month to make sure we cover everything. Also wanted to mention that in the next few weeks, I am going to be doing some new videos on Fibonacci retracements, showing how I use them and actually how they can be a very good trending tool. Trend analysis tool. And then I also want to talk about, I'm going to do new videos related to ADX and how to use it in multiple timeframes. Basically trying to identify patterns in multiple timeframes that can be really attractive. I've shown a few, but I think there's other ways to use ADX that can be pretty powerful. So make sure you hit that subscribe button if you want to see this type of content. And we're going to go straight into our market conditions. The trend and momentum, volatility, overbought, oversold. I'm going to show you how I look at overbought, oversold, and then also making sure we review the sentiment numbers. And again, I think this is real important to have your way of looking at the market, and you need to have, I think, at least these four components as a part of it. They all play a pretty big role in how I look at things. And if volatility increases, that tends to be negative. Obviously, if we start to work our way into overbought condition, that works against us as well. And then as people become more bullish, that is a negative, and that's something you want to keep an eye on. So let's go ahead and start out with the sentiment numbers just so I can give you a quick look. And I've told you in the past, I use the Investors Intelligence sentiment numbers. It's their advisors' sentiment. So they're looking at how many advisors are bullish or bearish. And so normally this 40 level is pretty important. If you get above the 40 level, it tends to be a little bit of a headwind for the market. It's just a little bit more difficult when that many people are bullish. And we just poked back above 40 again. Really kind of been in a little bit of a trading range, really. Every time it pops up above 40, it kind of drops back down. And then when it gets down to around 30, it seems to pop back up. So, it's very possible this is going to work its way up into the mid-40s again this time. But I think it's important to recognize that we're in a little bit more of a dangerous zone than we were when we were way down in this area or like this, when we get these prime opportunities to really dive in and be aggressive. Now I think you have to be a little bit better. It's not for novices. You better know what you're doing if you're going to be trading at this point or putting on investments at this point. You need to have a pretty good clue of how to do it. Otherwise, you could lose money pretty quickly. So it's just one thing we just want to keep an eye on. And again, that's just one of the market conditions. Let's go into the S&P chart. And what I'm going to do, before I go into the trend analysis, I am going to cover, number one, I'm going to show you how I look at overbought, oversold. So I'm going to go to the weekly chart. And I have a RSI 5 here, and I've put three scale lines across, one at 30, the solid line's at 50, and then the overbought line is at 70. And essentially what I would do if I were you is the higher this RSI 5 works, and this is something you could actually do on a daily basis. So the higher it works, if it gets over 70, that would be a negative on your overall market. You view that as certainly as a negative sign. And sometimes it can hang and linger up there for a few weeks, but the higher it gets above 70 and certainly above 80, you want to be a little bit more cautious about new buying. So, if we put this together with the sentiment number, it starts to become a little bit more clear. If we get a RSI 5 reading for the S&P on its weekly chart up around 80 and the sentiment number is up around 45, well, it doesn't take a rocket science to figure out that this is probably not a great time to be putting new money to work. So the same thing would hold true when it's overdone. If we get the oversold reading down in 25 or 30 and the sentiment numbers are, say, 30 or less, then that's probably a pretty good opportunity to do some buying. And we almost got down to 30 on this little drop here. But, so the whole idea is to continue to use this on a regular basis. And then the other thing I would look at is the percent of stocks. So most software packages have screening capabilities. And just to give you an example, I'm not saying this is how you have to do it, but so one thing you can keep track of on the S&P 500 right now, 81% of the stocks in the Russell are above their 18-week moving average. And, again, you could plot that. You could keep it yourself once a week. You just run the screen on the S&P, do it on the same list every week and plot it down. And then you could actually probably track it in Excel, and you could actually create your own indicator from that. And so I think it's a good idea to know from a bottom-up standpoint how many individual stocks are overbought or oversold. Or how many are above their key moving averages. So that's one thing you could think about. Let's go to the daily chart. I want to show you the volatility measure. And so this gray line is the average true range of the S&P. I use a 20-period average true range, and I use an 18 MA on the daily chart. And when the gray line is above the blue line, the moving average line, and it's rising, that's a negative for the market because that means volatility is rising. And if you notice what just happened just in the last few days, the ATR crossed down below the 18 MA. And so right now, I would consider the volatility measure at neutral. But if it drops down anymore and the blue lines, the 18 starts to roll over, then you're actually going into a more bullish condition because, again, the volatility is dropping and low. And if that's the case, if we have lower volatility, that's usually a more positive sign for the market. So this condition is actually starting to show signs of improvement. So if we go and look kind of where we are right now, the weekly RSI is a little bit overbought, but not too bad. It was actually a little bit worse coming into the week, and it's pulled back a little bit. But it's in that little bit more in that upper region. The sentiment numbers are a little bit up into its upper region, and we're trying to get this volatility measure to flip back down into a more positive condition. But just overall, we've started to work ourselves into a point where everything was bullish before, and now it's sort of working its way. No, I wouldn't call it neutral, but a little bit less bullish. And so let's go ahead and look at the actual market. Let's go through the market and using trend and the momentum indicators. And let's just we'll just start with the monthly chart. And if you notice right now on this monthly, we've got a pretty good month going. I mean, it started right near the low of the month. We've got a lot of green. It's been a pretty big bar. It tried to take out that inside bar we talked about, and it did that to the upside and actually broke out. And we're not done with the month. We still have a little bit of time left. So the question is, does this become a big tail like it did last month, or does it finish itself off in fully green and showing a lot of strength? We don't know, and we're going to have to watch. And this is the reason why I like looking at these bars, because it'll tell us a lot about the market condition. If we close with a really strong green bar, that's probably a pretty good sign for the following month. Let's go ahead and switch to the weekly, because I did want to point out that we're sitting on this breakout area. And, 3,500, we came down to 3,500 last week. And it basically, held the breakout area, which I consider to be the short-term breakout area is kind of like 3,500. And I would consider it to be negative if on a daily closing basis we were to come back down and close down below last week's low. I think that would increase the likelihood that we're really going to spend some time, further time consolidating and working sideways. If in fact we hold that low, which again is right around 3,500, and then we start to work ourselves higher, I think there's actually a pretty good chance we are going to break out. So that's just something I think we want to keep in mind as a sort of a key level to watch. As we zero in on the daily, I have mentioned the 18-day line is at 34.75 and rising. And so we're going to get a lot closer to 3,500 over the next couple days. And, if in fact it happens tomorrow where we break 3,500, then yeah, I would probably want to see this break the 18-day as well. But the whole idea is we're going to be watching price action at this level, this 3,500 area. If it's a really bad bar and it's got a pretty big size to it and the volume is a little heavier than normal, then that's pretty negative, even if it closes above the 18. So you got to take those types of things into account. I wouldn't be too hard and fast exactly at these moving averages if the price action is telling you that you're kind of taking out a key area. If we take a quick peek at the hourly, not a huge amount of change here. What's taking place is we've got a resistance zone up here, and we've got a support level that I think is pretty important on this end, right around 3,500. So we're sort of contained in here. If we can take this out to the downside, then I think you got to think we've got a little bit more downside risk and that we're going to spend more time in this trading range between 3,200 and 3,600. If in fact we hold this lower end and we can actually work our way higher, I'd prefer to see with a little bit better, a turn in the green again. And the last time we turned green, we couldn't get the ADX above 25. I'd really like to see, the 18 cross down below the 40. We never got that signal last time, and then maybe get us cross to the upside. And I think if we have that with some DI, I would view that as being a little bit more attractive than this last move. Let's go ahead and take a quick peek at the Qs. Really not much new to report in this. It's the same pattern that we've been talking about, extended away from the 18 on the monthly chart. The weekly chart is, it's still in this range. And again, I think based on the fact that the monthly is a little bit more extended, it would be healthier if this spent more time consolidating and working sideways. But right now we're respecting the 18 week. And until that changes, you have to have an upward bias in this index. Let's take a quick look at the daily chart. And so what's happening here is the 18 and the 40 are basically right around the same level, and right around the 284 to 285 has now become kind of like a key level to watch. I think if we come back down through these two moving averages, then again, I think that confirms more of the same sideways price action, not a lot new taking place. And, we're just going to have to be patient here and wait for either a move up through this resistance zone at 300 or get a little bit more confirmation of a breakdown through, this moving average environment and this last low here. And then I think that opens up the possibility of a deeper test down to the 260 area. So, again, I can look at the hourly chart. It's not really telling us a whole lot. We had the big down leg and really just been trading sideways inside of it with no momentum at all right now. We're looking for new momentum to show up on this index. And again, it's a pretty good idea to watch the hourly. You see the size of these bars? That was sort of the kickoff to the downside. Now we're looking for a kickoff. Well, it might be to the downside, but it could be to the upside. You want a big green bar or a big red bar to kind of tell you things are getting ready to go again. So that'd be something I'd be on the lookout for right now. Hit that like button, and we'll see you next time.